Hey everyone, welcome back to Corporate Decoder, the place where we decode complicated corporate stuff. Today we're diving into a report from the Vanguard Explore Fund, so get ready to explore some investments. It might be more interesting than you think, like finding out your grandma's secret recipe has a little bit of hot sauce in it. This fund's report covers the 6 months ending April of 2025. We'll look at how well the fund performed, what it cost investors and where the money was invested. Plus we'll try to figure out if this fund is a good place to put your money. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can chat about stocks, investing and more, so join us there if that's your cup of tea. First, some basics. This is a certified shareholder report, which means it's a regular update Vanguard sends to people who own shares in this fund. The report follows rules set by the government. This report covers two kinds of shares: investor shares, VXPX, and Admiral shares, VEXR. We'll see how they're similar and different. Let's quickly address the expense situation. For investor shares, the cost of a $10,000 investment was about $1,000 investment was about 141% annually. Note the annualized rate, meaning this would be in 1 year. Call the Admiral shares, you're looking at $14, which translates to 0.3 can't. For the Admiral shares, you're looking at $14, which translates to 0.30, which translates to 0.3 Euroton volume. Here is how the Vanguard Explorer Fund splits its money between different buckets. Healthcare 18.0%, industries at 21%, and information technology 17.2%, and financials at 12.1%. Those are the main buckets Vanguard is investing in. Alright, here's a quick rundown of some fun facts. This fund has approximately $18.861 million in assets, which mean about $18.8 billion, and it owns 733 different things or holdings. Now, here is a number they calculate on how active they are with the fund with 23% portfolio turnover rate. It means the fund replaced about 23% of its holdings, or a bit less than a quarter of the total portfolio during the past year. The report mentions that a full list of the fund's investments is available, but not in this report. You have to go to the SEC's website and look it up. Also, the complete schedule of portfolio holdings with the Securities and Exchange Commission, SEC, for the first and third quarters of each fiscal year as an exhibit to its reports on Form N-Porch. This part gets into all the numbers and accounting details. It shows what the fund owns, what it owes, and how it made or lost money. This can be tricky to understand, but we'll focus on the big picture. Here is a list of what is in the fund. Now, usually we can dive deeper into that list to see something interesting, but as mentioned before, they removed this particular report to another section. However, we will still read the section on the end to see if we can understand the general trends and health. There are notes related to this if you have questions about where these numbers come from in the report. The statement of assets and liabilities is like a snapshot. It tells you what the fund owns assets as of April 30, 2025 and what it owes, or liabilities. The difference between the two is the net assets. This is basically how much money is in the fund. There's close to $19 billion, or exactly $18,696,000. This is how much the investors originally invested. It's about 16 billion, while the rest of the sum comes in what they report as total distributable earning loss and investments. Let's move on to the statement of operations. It tells you how the fund made or lost money during the first 6 months of 2025. It looks at income, expenses, and gains or losses from investments. So let's see. Investment income wise, a major part is the dividends at roughly 76 million and almost 9 million in interest. So a lot of what they make comes in dividend or interest payments and other payments for being a shareholder, sub the net increase decrease. So all the changes in the investment comes out to 2,043,516, a loss of about $2 billion. But don't panic just yet. It may not be that bad. It's just an accounting quantity. The losses are change in unrealized depreciation. So just how the prices vary of the assets that they hold. To summarize the main expenses: investment advisory fees, almost 18 million. Payments to Vanguard, more than 11 million to the Admiral one and 3.5 million to the investor share program, and some marketing and sales expenses as well. The statement of change in net assets details how the fund's net assets have shifted between the start and the end of this 6-month period. In a few words, about 20 billion 6 months ago, 21,979,898 to about 18.8 billion, 18,086, accounting for a loss of about 3 billion across these 6 months. The financial highlights give you a quick view of how each share class performed over time. For investor shares, a share was worth 120 in the beginning of the period, net asset value, beginning of period, after the share did its thing with management, expenses, and whatever came with it after all is done, is worth unto rightmost 10%. Total return to right now net asset value end of period, the total return accounting for dividend, capital gain, etc. is about negative almost 10%. Total return to right now net asset value end of period. The total return accounting for dividend, capital gain, etc. is about negative almost 10%. Total return to, and here they explain a bit of more boring accounting information. If we just need a general idea to see what's happening with the company, it is not really needed for those quick overviews. There was a recent vote to retrieve key advisory roles. Basically, trustees are like the board, and their investors basically chose the investment advisors with different amount of votes. As part of the compliance, they run security checks where they try to see if anyone has access to more money that they are supposed to. Now that we've looked at the Vanguard Explorer Funds report, what does it all mean? On the positive side, the fund has a lot of assets, meaning it's a popular choice for investors. It is worth mentioning the loss of $3 billion through selling and unrealized depreciation could be worrisome if it was some piting that happened often. Thankfully, we can look up previous results to see if this is a trend. However, if this data and report is to be accounted, there may have been a big swing, but it managed to keep it thanks to interest. As well, the funds are diversified across different sectors, which helps to reduce risk. We do need to be aware that unrealized losses and market fluctuations are things that could affect returns, as is anything that is invested. Overall, the Vanguard Explorer Funds seems like a reasonably well managed fund. But as always, before you invest, make sure you do your own risk tolerance and preferences. What do you think about Vanguard Explorer Fund? Are there any other funds or companies you'd like us to decode? Share your thoughts in the comments below, and if you found this video helpful, please like and subscribe to Corporate Decoder for more easy to understand analysis of complex financial documents. Don't forget to join our Discord community. You'll find the link in the description. Thanks for watching.